Good morning, everybody. This is Patrick MontesDeOca with the live trading room for the Equity Management Academy. This segment is sponsored by the Equity Management Academy. On this segment, what I would like to do is I would like to review the current report that was just published a few minutes ago. If you go to the updates on the website, on the left side, and click on Gold and Silver Weekly Futures Swing Trading Instructions, October 16th, 2014, you will get connected to the recent report that we published, which gives you the weekly future swing trading instructions for next week. These signals are automatically generated by integrating electronic weekly statistics with proprietary algorithms. And for the gold market, what these algorithms or this report basically is describing is the components that make up the VC price momentum indicator. For gold, the weekly moving averages. The December gold futures contract closed at 12.39 on Friday, and the market closing below the 9-day moving average of 12.40 still is confirmation that the weekly trend is slightly bearish. But if you noticed, the market closed at 12.39, very close to the moving average of 12.40. And it tells you here that if it closes above that average of 1240 next week, any day next week, it would negate the weekly bearish short-term signal. This is when we begin to see the trend becoming neutral to long or to short by trading and closing above the moving average. The weekly momentum indicator, which is our algorithms here, with the market closing above the VC weekly price momentum indicator of 1237, market closed at 1239, closing above 1237, it confirms that the price momentum is bullish, that the price momentum is beginning to build momentum, bullish momentum. And it tells you also that if it closes below the VC weekly of 1237, it would negate the bullish signal to neutral. So this gives you an idea when the pivot point or the metrics that you use for the week neutralizes the signal closing above or closing below. The weekly price indicator basically is telling us that if you are short and you are looking to cover your shorts, that the corrections, to cover your short on corrections at the 1224 to 1209 levels and reverse long, it's a weekly reversal stop on a weekly basis. If you reverse long, use the 1209 level as a protective stop, good till cancel on a weekly basis. And it also tells you that if you reverse to go long, if we come in next week and it triggers this buy entry points at these levels here, that you should take profits at 1252 or 1265. Or the fact that the market closed above 1239, which is a bullish indication, is telling you to take some profits short term in the 1252 to 1265 levels during next week. These levels can be used to trade alternative derivatives in the same sector as the gold market. it can be used as a timing tool to enter into these other instruments that we will review specifically on another broadcast, what some of these instruments we're using as alternatives to trading in the futures markets. What I would like to do now is take a look at the chart, basically what we did here last week as we came into this week, and see if the published report for the week of October the 10th gave us any positive results. And once we review what happened last week, then we would look forward to seeing how these indicators basically are going to help us in trading next week with very, very specific levels and very specific actions in terms of what you should do as a trader. If we take out if we look at the daily gold chart here on the left, these lines in red here that you see correspond basically to the resistance levels here that you see in the report from this week. But what I want to look at is what the market did based on the signals that was published on the 10th. When the market closed Friday the 10th at 12:23, it told you that basically the momentum was still a little bearish, and that closing above the VC weekly price momentum indicator of 1213, it was bullish, and it confirmed the bullish stance coming into last week. It also told you where, you should put your stop, that if it closes below 1213, that it would turn the bullish signal to neutral. And it told you basically that if you go short, if the market came down below 1213, that the 1103 and to 1163 would be the ideal levels to cover those shorts. But if you were long, which we were coming into last week, to take profits at the 1243 to 1264 levels during last week. And as you can see here on the 10th, Friday's close, on Monday the market traded higher into a new high that was made by Wednesday of 1250. So it took out the first target of 1243 from the previous week. And it's looking now to obviously reach the upper end of the target of 1264. It gave you the opportunity for you to liquidate your position for a substantial gain if you had taken the long position just since last week's close of 1223. That was about a $2,000 trade if you sold it into 1243. The high was 1250, so even if you had a limit, you would have taken that limit out at 1243. Now, let's take a look at what this current report published today is telling us for next week. On Friday the 16th, the December gold futures contract closed at 1239. The market closing below the 9-day moving average of 1240 is slightly bearish, but if it closes above 1240, it would negate this short-term bearish trend to neutral. With the market closing above the price momentum indicator of 1237, you're beginning to see that the price momentum is turning bullish, as well as a close above 1240, the moving average would begin to turn bullish, or I should say neutral to bullish. And it tells you that if it closes below the VC weekly price momentum indicator of 1237, it would negate the weekly bullish signal to neutral on the momentum indicator. It also tells you that if it does close below 1237, to cover your shorts at 1224 to 1209 levels and reverse to a long position on a weekly reversal stop. If you buy long at these levels, into these levels, then use the 1209 level as your stop, close only, and good till cancel order. It also tells you if we continue to see the market run up, or the continuation pattern, the momentum indicator being bullish, if the pattern maintains its bullish stance into next week, that you should take profits again at 1252 to 1265, which are these levels here that we see on the chart of 1252 to 1265. And specifically, it's telling you the sell one level is 1252. The second one is 1265. The fact that the market closed about 1237 is bullish. It also tells you that if the market drops to these levels of B1 of 1224, to buy one, and 1209 to buy a second level, as this becomes the most oversold level into next week. And what you see here is basically the support after the market made new lows the previous week, the week of the 6th, that the support levels are beginning to increase as the target levels also in resistance are beginning to increase. These levels here of buy one and buy two levels are ideal levels to trade alternative derivatives outside of the futures contract. And as we ended this week, let's recap. Once again, a close above 1237 is bullish with target objectives of 1252 to 1265. If it closes below 1237, your downside targets are 1224, 1209. If it closes below 1237, you have the option to go short and take a short position and cover at these levels indicated in buy one and buy two. If you're looking to add to your current position, which might be long over the long term, these are ideal weekly levels now that the market is indicating are very high probabilities to accumulate assets in the gold market or anything related to gold. Let's take a look in silver here and see what basically the market is telling us, or basically told us the previous week as we came into last week. On December, the December silver futures contract closed at 1739 on October the 10th. And that's pretty much the close right here. The market closing below the 9-day moving average of 1846 last week was confirmation that the weekly trend momentum was still a little bearish, and that it would basically negate the bearish trend on a close above 1846 on the moving average. The weekly momentum indicator is telling us that With the market closing above the VC weekly price momentum indicator of 1726, it's confirmation that the price momentum has turned bullish. A close below would negate this bullish signal to neutral. If you are short, it's telling you, and this is the algorithm, to cover your short on corrections to 1679 to 1620 levels and reverse long on a weekly reversal stop. And if you buy long, use the 1620 as your stop level and go till cancel order. If you are long, then look to take profits into that 1785 to 1832 levels. And this is what I told you coming into last week. Well, let's take a look and see what happened here. On the close of the 10th, 1739, the market by Wednesday made a high of 1782 on the, I believe it was on Thursday, the 15th. Let me see here. Wednesday the 15th, we made a high of 1782, so it took out the target objective, or came very close to the target objective of 1785. If you were carrying your position with a trailing stop, you should have been able to take out your profits, get stopped out, or within reason, be able to take out profits very close to the target. What we suggest our subscribers is to use a 10% margin of error where you would put your stops about 10% away from the targets, as markets sometimes they go beyond the limit or they get very close to the limit. But giving you the option to put your sell order, your liquidating order, within 10% of the objective almost assures that if the market gets within that vicinity, that you will be taken out. You don't necessarily have to wait for every nickel and dime in order to activate a signal. As a trader, you can use your judgment that if you're 2 or 3 cents away from your objective and you've been long with a 40-cent gain or a $2,000 profit, use prudent money management application and risk management application and lock in your profits. Now, let's take a look what we just published for this week and see what we can expect coming into next week. The market basically closed in silver at 1727 on Friday. Then the market closing below the 9-day moving average of 1820 is confirmation that's still a little bit bearish, but a close above it would negate the weekly bearish short-term trend to neutral. With the market closing above the price momentum indicator of, actually it's below the price momentum indicator of 1737, it confirms that the price momentum is bearish, and a close above the VC weekly, it would negate the bearish signal to neutral. It tells you that if you're short or bearish, to cover your shorts at the 1692 to 1657 levels, which would be the ideal levels to reverse and to go long. And if you buy long, to use the 1657 levels as your stop, close only, and good till cancel order. It also tells you look to take some profits on longs as we reach the 1772 to 1817 levels during the week. So you can see here basically that the market is indicating the possibility, if based on the fact that it slightly closed below the VC price momentum indicator of 1737, that the ideal buy and entry point would be 1692, that the market could come down to 1692. And if it does, it's recommending to buy one at 1692 and buy two at 1657 if it comes down there. On the upper end of the range, closing about 1237 would trigger a buy with targets of 1772 to 1817. We have defined very specific levels in terms of the algorithms for very specific objectives into next week. Now, what I would like to do is take a look at the, going back to the gold market here, and let's take a look and see the bigger picture on the weekly basis, what it's telling us. If we can use these algorithms and define, you might say, where we might see the objectives on the downside as well as the upside on the weekly charts. You can see obviously here in using the algorithms that we have defined what appears to be a major level of support on the long term, on the weekly charts. And we have defined here 1, 2, 3 bottoms basically have been made with an upward bias now, a second week closing above is a positive confirmation that we seem to be building some kind of a bottom. And as you can see here, even though this bottom was lower than the previous bottom, not lower than the one that we made in June 24, 2013, is still holding this low level of support. It's indicating that there is some positive synergy developing here with the market rejecting these lows every time. Now going on 3 bottoms is pretty good confirmation that the market is telling you something. It's rejecting lower prices. So taking this into consideration, we are suggesting our subscribers that they should use these levels to accumulate long-term positions on the long side for gold and silver. You can see the market very close to the moving average that we use. We use the 9-day moving average. It's basically confirming that the synergy, the path of least resistance, is to the upside. Let's add basically the Fibonacci retracements that we're looking at from the high basically that we made going back to 2011 of 1804 to the recent low, and see where this thing could be headed for. Closing above 1265 puts in the target of 1328 as a 23.6% retracement, Fibonacci retracement. 1419, 38.2% retracement, and 50% retracement is 1493. A golden ratio, 61.8% retracement is 1586. Closing above 1586 would take us all the way up to 1671, 1672. These levels are potential levels that we could see the gold market accomplished over the next few months based on the Fibonacci retracements from the high that we made in 2011 to the recent low that was made last week. Let's add the Fibonacci fan lines and give us a much better long-term idea where these long-term fan resistance levels could take us to. The first level matches the 38.2% retracement Fibonacci at around 1419, which is a very good probability that we will see this target tested. Very strong synergy between the fan lines and the Fibonacci retracements. The next level is the 50% retracement of 1493. The upper end is 1566, which match exactly the Fibonacci retracement. And closing above here, obviously, it would look for a target of about 1671 with an ultimate target that will change the long-term uptrend of the market and will reinstate basically what I believe is the long-term secular bull market that we've seen. It will confirm a breakout above 1805. And you're looking at targets above there of 2192, which will be the next fractal in price. And if you take a look at where we are over the long term, you can really begin to see a very nice bottoming is taking place in the gold market. Let's take a look at silver on the weekly chart and see what the algorithms are indicating for us into next week. The same picture here in silver, you can see the market coming down into these levels that appear to be indicating building support. The blue lines are very high probabilities that this is a major level of support being formed. With the price action slightly bullish here, it indicates that markets are looking to reach out to above 1772, which was the target that we went through last week. The market rallied to 1785. And now it's looking for 1817. So if you're long, take profits at 1817 for the time being and let the market tell you what the next move is. Now, if it closes above 1817, it would be confirmation of a breakout. So let's see where this would take us. Once again, let's use the Fibonacci retracement here on a closer basis. We can take a look at from the high that we saw recently in July to the recent low. It would give us a shorter term configuration in terms of a retracement level that we could see short term. And from this Fibonacci retracement here, you can see that the first target has been accomplished of 23.6% retracement, which is about the 1781 level. Closing around the 1737 or below, it's still slightly bearish with the potential to come down maybe to 1692 as a buy one level or B2 as the maximum second level that it's recommending for you. These are levels that you can use to add to your positions, to initiate long positions with high probability, or to accumulate on your long-term perspective. If we close above 1817, the 38.2% retracement is 1852. 50% is 1911. 61.8% is 1971. This is the golden ratio objective, and we can get up to as high as about 2054 over the short term. Breaking above 2054 would take us for a target of about 2161. And closing above 2161, we're looking at targets of about 25 cents for the silver market. So this looks like on the upper end of the range has the potential at a maximum for the near term about 8 cents. Realistically, for the near term, about 2 or 3 cents into these resistance levels. And what we want to see is how the market reacts to these levels when it gets here. That will determine for us the validation and confirmation of the continuation pattern that we expect that will take us all the way up to about 25. So we have taken a look now in the application of the daily and the weekly signals for the VC price momentum indicator. Any questions at all, please feel free to call directly at 805 area code 418-1744. We have live operators that are available to talk to you if you have any questions. And until next week, my friends, this is Patrick MontesDeOca wishing you good trading next week. Take care.